If you're a freelancer making over $80,000 a year and you're still operating as a sole proprietor, you could be overpaying in taxes by $8,000 or more every single year. The fix? Electing S-Corp status. But here's the thing, it's not right for everyone, and doing it wrong can actually cost you more. In this video, I'll explain exactly how S-Corps save you money, when it makes sense to switch, and how to pay yourself the right way so you don't trigger an IRS audit. Note: this information applies to US-based freelancers. Welcome to the Freelancer's Wealth Blueprint. Subscribe for weekly videos on building wealth as a freelancer. Let's start with the basics. As a sole proprietor, every dollar of profit you make is subject to self-employment tax. That's 15.3% on top of your regular income tax. It covers Social Security and Medicare. On $100,000 in profit, that's $1,500 in self-employment tax alone, before federal and state income taxes. With an S-Corp, you split your income into two buckets, salary and distributions. You pay self-employment tax only on the salary portion. The distributions? They're not subject to self-employment tax. Let me show you the math. Say you make $100,000 as a sole proprietor. You pay roughly $1,300 in self-employment tax. Now say you elect S-Corp status and pay yourself a reasonable salary of $60,000. You pay payroll taxes on that $60,000, which is about $9,180. The remaining $40,000 comes to you as a distribution with zero self-employment tax. That's over $6,000 saved on the same income every year. At $120,000 in profit, the savings jump to around $8,000. At $150,000, you could save over $10,000 annually. So why doesn't everyone do this? Because S-Corps come with costs and complexity. First, you have to run payroll. That means payroll software or a service, which costs $20 to $50 per month. You'll file quarterly payroll tax returns and deal with W-2s at year-end. Second, you need to file a separate business tax return, Form 1120S for the S-Corp. That's on top of your personal return. Accounting fees go up. Third, some states charge extra. California, for example, has an $800 minimum franchise tax for S-Corps. Other states have similar fees. Fourth, you lose some simplicity. Sole proprietors just report income on Schedule C. S-Corps require more record-keeping and formal processes. So when does switching make sense? The general rule: if your net profit is consistently above $80,000 per year, the tax savings usually outweigh the extra costs and complexity. Below $60,000? The savings are minimal and probably not worth the hassle. Between $60,000 and $80,000, it's a gray area. Run the numbers or talk to a CPA. Above $80,000? You're likely leaving money on the table as a sole proprietor. Now let's talk about the most important part: reasonable salary. The IRS requires S-Corp owners to pay themselves a reasonable salary before taking distributions. This is where people get into trouble. If you set your salary too low to avoid payroll taxes, the IRS can reclassify your distributions as wages. You'll owe back taxes, penalties, and interest. There was a famous case where a CPA paid himself $24,000 while taking $220,000 in distributions. The IRS reclassified $151,000 as wages. Massive tax bill plus penalties. So how do you determine reasonable salary? Look at what similar professionals earn for similar work. The Bureau of Labor Statistics has salary data. Sites like Glassdoor and PayScale show industry averages. Consider your experience, your role, your hours, and what you'd pay someone else to do your job. A common rule of thumb is the 60-40 split. 60% salary, 40% distributions. But this isn't an official IRS guideline. Your actual split depends on your situation. For most freelancers, a reasonable salary falls between 40 and 60% of net profit. Document your reasoning and review it annually. Here's how to actually make the switch. If you're a sole proprietor, you'll first need to form an LLC in your state. Then file Form 2553 with the IRS to elect S-Corp tax treatment. If you already have an LLC, you're halfway there. Just file Form 2553. The LLC stays the same legally. Only the tax treatment changes. The deadline for electing S-Corp status for the current tax year is March 15th. If you miss it, your election applies to the next year, though there are late election relief options in some cases. Once you're an S-Corp, here's how you pay yourself. Set up payroll. You can use services like Gusto, ADP, or QuickBooks Payroll. Pay yourself a regular salary with proper tax withholdings. At the end of each quarter or year, take distributions from the remaining profits. These show up on Schedule K-1, not a W-2. Keep clean records. Separate business and personal finances. Document everything. Let me give you a quick decision framework. Choose sole proprietor if your net profit is under $60,000. You want maximum simplicity, or you're just starting out and income is unpredictable. Choose S-Corp. If your net profit is consistently above $80,000, you're comfortable with payroll and extra paperwork, and you want to minimize self-employment tax. Not sure? Talk to a CPA who works with freelancers. A 1-hour consultation can save you thousands. Here's your action plan. This week, calculate your net profit for the past year. Is it consistently above $80,000? This month, if yes, research CPAs in your area who specialize in small business. Get a consultation. By March 15th, if you're switching, file Form 2553 to elect S-Corp status for the current tax year. That's the breakdown. S-Corp election isn't for everyone, but for freelancers earning above $80,000, the tax savings are real. If this was helpful, subscribe. We post new videos every week on freelance finance. And remember, this is educational content, not tax or legal advice. Your situation is unique. Work with a qualified professional before making changes to your business structure. See you in the next one.